Hello and welcome to this Astranti video. Today we'll be looking at the roles of management and financial accountants. We'll start off by looking at their function and purpose, and then use this to draw out some distinctions between them. This is particularly important if you're studying for BA2 or BA3, as this is a topic which may appear in your exams. This is an extract from Chapter 1 of our BA2 course. If you want to view the full video, this can be found on the Astranti website, where all of our CIMA certificate resources can be accessed for free. On there, you'll also be able to find study texts and a range of mocks and exam-style questions, which have all been designed to help you pass your CIMA certificate exams. But for now, let's jump straight in and consider the roles of management and financial accountants.
Let's say that you're a director of a shoe factory and you've got the responsibility for ensuring that the business is profitable and run effectively. So to do this, you require all kinds of information about the performance of the business, a task which you've got two accountants to help you with. You've got Bob and you've got Megan. So Bob provides you with information you need to help make business decisions. So for example, by reviewing performance over the past year, identifying any variances, so why you overspent in certain areas, and how these variances can be avoided or in fact improved in the future. He helps you understand what costs are likely to be in the future and outlines the budget, and also estimates and evaluates the profitability of a new shoe line, for example. And with all of these responsibilities, Bob is a management accountant. Now, Megan, on the other hand, takes all of the day-to-day accounting transactions and records them all, which includes documenting information on the assets, liabilities, and the equity of the company, and she then uses this information to compile monthly reports, which outline the profitability of the business last month and its financial position. And then at the end of the year presents all of this information in a set of financial statements that will be available for all stakeholders to view. And with these responsibilities, Megan is a financial accountant. And contrasting the roles of management and financial accountants is the best way to fully understand the roles each carries out. Now, it's worth saying that in the real world, accountants take up both areas of responsibility. But we're going to assume that both Bob and Megan have very clearly defined roles. So Bob, as a typical management accountant, will use internal accounting information to provide management with the basis to make informed business decisions. Whereas Megan, as a typical financial accountant, is more focused on recording financial transactions and then ultimately summarising this information in the financial statements, such as the statement of profit or loss or the balance sheet, so that the shareholders and other interested parties, regulators, government, staff, for example, can understand the financial performance of the business. So there are a number of key differences between these two types of accounting, and let's outline each of these and consider what Bob and Megan would do within each area, starting with the focus of each. And management accountants primarily have a forward-looking focus on supporting future decisions. So Bob would, for example, predict the profitability of a new range of shoes, or the likely impact on profits that opening new stores in a different country would have. Whereas financial accountants focus on historic information and recording past transactions. So Megan would record and organise all of last year's transactions to calculate last year's profits. And the basis of the information that both uses also differs. So management accountants use both financial and non-financial information with a degree of prediction and estimation about the future in order to support future decision making. So Bob would review the past sales of similar ranges and trends in shoe sales across different markets to help predict how well the new range is likely to sell. Whereas Megan, on the other hand, as a financial accountant, she'll consider purely factual financial information based on past events, recording and reviewing the completed and actual transactions, relating to things like materials purchases, salaries, asset purchases and sales. But once this information has been analysed, who makes use of it? What is the demographic for these two types of information? Well, management accounting information will be used by managers within the business, within the organisation, to form a basis upon which informed decisions can be made regarding the business, its aims, and how it operates. So managers will use Bob's reports, for example, to help them decide whether to go ahead with the new SUE range. Whereas the financial accounting information has a much wider range of users, including shareholders, creditors, and public regulators, all of which will want to review the financial statements that Megan produces in order to better understand the company's past performance. And with the differing user groups comes a difference in the availability of this information. So management accounting information, as its focus is on supporting internal decisions, which could be key to competitive advantage, is usually confidential. So Bob, for example, wouldn't disclose any information relating to the new shoe range in order to retain an edge over competitors. Whereas the financial statements that Megan produces, well, these are publicly available. You could even go online right now and see the financial statements of a number of different companies available to view on their websites. And the nature of the information produced by both also impacts on the construction of the reports, how the information is compiled. So management accounting reports and information are assembled subjectively. They're assembled according to the needs of the user or the business. So Bob has got no specific rules to apply when he's doing his evaluation and must deliver information necessary to support future decisions in the most suitable format for decision making. Whereas on the other hand, financial accounts need to be constructed according to general accounting standards. So Megan's got to abide by strict standards, adhere to a set structure, which ensures that information is clearly understandable by all the external parties that might be using these reports. So to summarise all of this, we can say that a management accountant is employed by a company to assess internal information and analyse how it can be used to improve performance in the future, which differs from a financial accountant or an auditor who is often external, brought in to ensure the company is complying with financial and accountancy regulations.
So we've now come to the end of today's video, and you should now be confident in distinguishing between management and financial accountants. If you want to see the full video, this can be found on the Astranti website, where all of our CIMA certificate resources can be accessed for free. Once you've signed up, you'll not only be able to access this video, but all of our CIMA certificate study texts, videos, exam practice questions, as well as mocks for each of our certificate exams. Why not also join our CIMA certificate study group on Facebook, where you can share study tips with others taking these exams. If you've enjoyed this video, why not subscribe to one of our many social media accounts? We can be found on Instagram, Facebook, Twitter, LinkedIn, and of course here on YouTube, where we upload new videos twice a week. Thanks for watching.